we're good.
Last question. What's your relationship like with Roaring Kitty? You guys talk much?
Today's interview with Ryan Cohen was amazing, and he was finally questioned about Roaring Kitty. Watch until the end of the video. I'll leave timestamps down below. We got a lot of stuff to cover. Make sure to hit that like button. It is free, and it helps engage the algorithm and get this video out to more people like you. Before I do that, I want to talk about the sponsor of today's video that has had 5 green weeks in a row trading under $3 and just got their biggest buying volume week yet, and that is Micropolis Holding Company. Ticker symbol MCRP. This is an Nvidia-backed robotic powerhouse. While Tesla and Boston Dynamics grab the spotlight, a new contender from Dubai is quietly changing the game. Meet Micropolis Holdings, or MCRP, backed by Nvidia, already developing AI-powered patrol robots with Dubai police and expanding fast across the Middle East and North Africa. Built on Nvidia's AI backbone as a part of the Nvidia Inception program, Micropolis runs on cutting-edge Orin-based edge processors, meaning its robots think, see, and act in real time. And its M patrol units are already on duty in Dubai, featuring 360 degrees AI vision, behavioral analysis and suspect tracking, as well as fleet management software. Now, the major called the collaboration, in quotes, a milestone in the future of smart policing. A new deal granted exclusive rights to bring Micropolis patrol robots into Egypt and North Africa, tapping billion-dollar defense and infrastructure markets. The analysts project robotics and AI automation to surpass $350 billion by 2030. Micropolis sits at the heart of that boom. AI, smart cities, and government contracts. Live contracts and deployments, Nvidia partnership advantage, as well as early stage AI robotics play, with the stock trading below $3, trading at $2.22. This is most definitely on my personal radar. Let me know your guys' thoughts in the comments down below. If you already have a robotics company like this, and if you believe that this company is one that you are going to be putting heavily into your portfolio, let me know in the comments down below on ticker symbol MCRP. Now, during the live stream today, Greg commented, ask him if he's talked to Roaring Kitty lately. And they asked him, and Ryan Cohen's response was actually pretty interesting. He took a long pause, and I'm going to play the clip of the full response for you right here. It's only about a minute. He took a long pause, first of all, and this pointed to a couple of things. It pointed to he either didn't want to lose the momentum, or he thought that Roaring Kitty may have sold his GameStop and made money off of Chewy, so on and so on. It pointed towards a couple of things, because he also hinted he doesn't want day traders here, and if that's what Roaring Kitty is looking for, then it's probably not worth having a conversation with him. But he did say that he would love to have Roaring Kitty on the show and have a conversation with Roaring Kitty, which I think is huge, because it puts the ball now in Roaring Kitty's court. Everybody now has to back off. Everybody now has to tag Roaring Kitty and say the ball is in your court. Everything that's built Roaring Kitty, he's built it himself, but everything that what he does is built on, the CEO of that just put the ball in his court, which I think is huge and very important.
Last question. What's your relationship like with Roaring Kitty? You guys talk much?
Ask him.
Okay. Yeah, we'd love to have him on the show. Maybe we'll
Get him on the show.
That'd be a lot of fun. He's
Yeah.
you know, we're pretty new to the live streaming thing. I always enjoy talking to people who operate in the same medium, and so
Yeah,
I'm sure we'll have a conversation.
Yeah. We don't want day traders. I'll have a conversation with him if he's focused on decades and centuries, not on making quick buck.
Yeah, that makes a ton of sense.
I like it.
Well, yeah. Well, we're rooting for you for the next decade, for the next century, for the next millennia. Thank you so much for coming on the show. This was fantastic.
Yeah, great chatting, Ryan. Cheers.
Okay.
Have a good one. Bye.
Good fun.
I like the interview very much. I want to talk about a lot here. What I can state from the interview, Ryan Cohen made it very clear that he wants long-term shareholders, long-term positive increase in price action for shareholders. It's not a day trading movement. It's not a get rich quick movement. This is what he portrayed in the interview. And he also said a couple other things that, they're going to be very smart with their investments. He also said not if, but when the market crashes, which I thought was very interesting because there's other tin going on. People posting Black Monday, and that was the post from TBPN before the Ryan Cohen post and things like that. I'm not putting much to that, but he did state that very clearly. If you listen specifically, could it just have been a mess up? Sure, possibly. Ryan Cohen's a chill guy. He also said, he also talked about AI, social media. He believes social media is not that good and that there should be rules. And AI, the takeover right now, is overall more dangerous than we think, and all that other stuff. If you want to go find the full interview, I actually found it very interesting that it was pretty hard to find the interview. You can go watch it on X, on TBPN, their page right now. Now, GameStop, a fresh look at valuation after recent share price dip. I thought this was interesting. This is what the article says. GameStop shares have continued to attract attention, especially as the stock saw a recent dip of 3% over the past day. Despite these fluctuations, investors remain curious about what is driving valuation at current levels. GameStop's share price has drifted lower in recent weeks, reflecting a 7% drop over the past month, 24% decline year to date, as shifting market sentiment tempers the meme stock excitement from earlier rallies. Yada, yada, yada. You go down. Let's talk about the valuation. GameStop's last close at 23.30 stands in stark contrast to the narrative's calculated fair value at 120. According to Prime is Back, the company's transformative strategy could be a game changer for believers and skeptics alike. They go on to state that GameStop's Q1 financials, combined with an amazing shareholder community, just shows it takes money to buy whiskey strategy at work. This demonstrates its status as a compelling investment, as retail investors have been saying for years. While facing challenges from legacy media, bots, social media manipulation, and hedge funds, GameStop delivered a stellar adjusted EPS of 17 cents, beating estimates by 325%. Yada, yada, yada. This was interesting as well because Ryan Cohen also talked a little bit about this, about social media and how, ultimately the media and how their coverage is on GameStop. He was asked about that, and he basically said that they don't really know anything, and they pretend to know about the company. They pretend to give their opinions and front run this. Now, if you really read through this, here's what I want to point out. Long story short, so I don't have to read the entire article to you, while our earlier analysts pointed to a significant undervaluation, a look at the price to earnings ratio delivers a more cautious message. GameStop trades at 28.8 times its earnings, which is far higher than both its industry average of 15.8 times and the peer average of 18.4 times. This suggests investors are paying a premium relative to comparable companies. This is wrong. If you look, there was a study done and 231 companies were analyzed, and the average PE ratio in the same industry is 30.6. Now, the point being is that if GameStop traded at 30.6 price to earnings ratio, the fair value price would be $26 a share, and we're trading at $23.27 after hours today, which I found very interesting. That puts GameStop's fair value within its sector at $26 a share, which is also a huge base level for the stock if you just look at the charts. Now, I also wanted to note weekly time frame. We saw a good day today. Exactly what we expected, kind of. We saw the weekly candle begin green, like we see, building a perfect candle on this trend line that we have drawn out. And if you have been watching the videos, congratulations, you're up to date. This also marked day 42 of trading into the cycle, in which should have marked the bottom, and it looks to have marked the bottom. This also marks right where the MACD decided that it wanted to almost cross to the downside on the weekly, but it decided today, this week, hypothetically, to not do that and to continue to give us some green momentum. We hope. As of right now, we are getting the first signal that that is the trajectory of what we are seeing. So today, first day of the week, trading, very good, very positive, especially talking about BYND, Beyond Meat. We talked about it Friday. I can pull up a screenshot right here if I remember while I'm looking through the video in Discord. Beyond. I also gave it to one of my buddies, one of my boys. 127% gain today disgusting. Absolutely beautiful. Made some gains off BYND. If BYND continues, in which case I do believe it will hit $1.75 at minimum, then I'm watching 206. Put that on your charts. $2.06 will be a major resistance level. If we break higher, 254, 377. I think it's very unlikely we get past 377 on beyond, but you never know what's going to happen in these markets. You are risking retracements down to 127 as well as 111. Okay, I want you to note that as well. And the only people that make money are the ones that take profits. Now, be very careful what the media is going to feed you, because they are saying BYND is a retail short squeeze, which is somewhat true, because we saw all of what was going on Reddit around BYND, but institutions played in the game today. $100 million worth of shares put in a single buy block was entered today. No retail is doing that. Amazon dies, Amazon stock closes up 2% or so, whatever it is. Amazon was still bouncing. As many of you know, AWS, Amazon's web services, were down today, or web systems were down today, whatever. That affected almost everything you could think of. That is why things are glitchy for you, things are weird for you, and yet the stock is still green. I thought this was pretty interesting because I wanted to talk about Amazon and how it actually looks positioned for a move down. I think Amazon coming into the earnings Thursday, October 30th, is positioned for a hard move lower, and I want to warn you for that. Again, I'm not going to give a full analysis on this right now. I'm just giving you my initial reactions to this, and I think the algorithms were off. I think that this was supposed to be some sort of black swan catalyst and a bad drop for Amazon, but there might be something more in the future to this. If the tinfoil hat theory that the Black Monday Ryan Cohen thing coincides and actually comes to fruition, the markets are going to see a very, very hard drop, 20% drop or so. I've been calling for a harsh drop in the markets. I didn't think they were just yet, especially with how the day played out. I just want to put that out there, that at some point over the next 3 months, and you can quote me, I think the market's going to fall hard. It's going to correct very aggressively, and people are going to be very, very fearful. Tesla, you are risking a couple of things. I think that if you are a bear, you're risking Tesla to come above 490 on its earnings. If you are a bull, you're risking Tesla to come below 365 on its earnings. These are huge levels to watch. Alibaba has also been looking beautiful. But overall, guys, that is what I got for you for tonight's video. Hopefully you enjoyed watching or found value out of the video. Let me know your thoughts in the comments down below on everything that we covered. Go watch the video I uploaded earlier. Make sure to join my Discord server. That is a top link in the description of the video. I love you all. God bless. Lottery stocks out.